Hey traders and investors, welcome to Monday's Market Outlook here at Wealth Creation Investing. Matthew Buckley, the Chief Investment Strategist here at WCI, and a very interesting week last week. Obviously, I think this weekend was a lot of soul searching going on with institutional investors and traders really kind of standing here rubbing our face after the jobs report on Friday. 74,000 jobs created. That we can find that in our couch. I mean, that's just not even. It might have been. It could have been zero at 74,000, especially with the unemployment rate decreasing, mainly because a record number of Americans have left the workforce. That's not good news for the economy. And the quiet start, the first full week of trading in this new year, really essentially flat, slightly down, 0.8%, maybe close to a percentage point to the downside. That doesn't bode well for the rest of the year, okay? Usually 2/3 of the time, this first week in January has been positive. Last year, we were up 2-3% the first week in January, and we had that rip your face off rally essentially throughout the year. Just shows you that we really are walking around on eggshells in this market. And as we get into Q4 earnings season, if earnings are weak, that might be the catalyst that sends this market to the downside, or at least some profit taking after a record 2013. So we're going to be very, very careful. I'm having a blast trading this because trading options, I can potentially make money whether the market goes up, down, or sideways. But we're going to be very, very careful because markets go down a hell of a lot faster than they go up. And once if you're waiting for somebody to scream fire as a retail trader or investor, you're usually going to get stampeded by the big guys. So hopefully you're trading with us over at Top Gun Options or over at Wealth Creation Investing, because we see the canaries in the coal mine, and when they start to drop, we'll be out or getting ready to get very, very bearish. This week on the flight schedule, Monday really not too much, but the rest of the week has some pretty significant economic data. On Tuesday, we're going to see the potential strength or weakness of the consumer. We're going to see retail sales. And whenever you see the word core, it means X something. So core retail sales is X autos, and then obviously regular retail sales. So Tuesday, we're going to check out the health of the consumer. Wednesday, we're going to take a look at PPI. Now, PPI is the Producer Price Index, right? It's an indicator of consumer inflation. Obviously, when a producer charges more for goods and services, those higher goods are passed on to what? Us, the consumer, right? Businesses aren't charities. They don't say, we're going to suck up that cost. No, they pass it on to us. The Beige Book, looking at some minutes of the Fed meetings, and then the Empire State Manufacturing Index, potentially market moving, medium impact expected in the market. If along with the weak jobs report on Friday, we start seeing weak economic data this week, could also be a potential tipping point to the downside. We'll get weekly unemployment claims and core CPI on Thursday, and CPI is the change in the price of goods and services purchased by consumers, right? X food and energy, because you saw the word core and you said it's X something, like Wiz said, right? Consumer prices account for a majority of overall inflation. So we'll get a sense of how we're looking at an inflation. And we're actually in a deflationary environment. I mean, folks, the Fed's target rate's 2%, and we barely have a heartbeat with inflation. Could be troubling. On Thursday, we're also going to get the Philly Fed, so we'll get a look at the Empire State earlier in the week, and then the Philly Fed later in the week, and NAHB, National Association of Home Builders, on Thursday. That could potentially move the market around as well. And Friday, definitely some market moving with building permits and University of Michigan consumer sentiment. So with retail sales, some inflation numbers, and some housing numbers, this week is going to be potentially very, very volatile. After last week, wallowing around for a little bit, and then getting that just absolute smack in the face on Friday with the jobs report, I think the market is a little bit stunned, but this week, we're going to take that stunned and decide what to do. And if we're seeing weak economic data, I don't think that's going to be good news, right? In bizarro market, that weak economic data would have meant, well, the Fed's not going anywhere, or they're going to stop their quantitative easing. I think the Fed's going to need to see a couple months of really bad jobs numbers to get back into the QE fight. Otherwise, I think Janet Yellen keeps on the easing process unless we absolutely see all the economic data implode. And then that's bad, right? That might result in a market sell-off, a market implosion, and then the Fed might decide to get involved, okay? So be very, very careful trading this market, folks. If you need any help, make sure you give us a call here at Wealth Creation Investing or Top Gun Options at 888-308-2112 to help you make sense of this market with some of our live trading service or trade alert services, okay? I got to run. Happy hunting. Make sure you hedge, and I'll talk to you Tuesday at Top Gun Options with our market sit rep. We'll see you.